Hi everyone, today let's talk about the CPI report. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So CPI data came in higher than expected, which was what I thought was going to happen. We came in at 0.4 and 3.2 from a year ago, so that's higher than expectations. And initially markets did not like that, and then we ended up higher on the day, which was pretty surprising to me, to be honest. And you can see the forecast numbers here, 3.1% for the year, and then you can see month over month numbers. It was expected to be flat, and then we ended up going up 0.1%. And this has actually been trending higher here pretty consistently. We started at 0.2 in December, 0.3 in January, and then 0.4 here in February. So that is not what you wanted to see if you're trying to get some cuts from the Federal Reserve. And in my opinion, he's probably going to slow down the cut train. We thought that we might get one in June. And honestly, if these reports continue to come in like this, we could see less than 3 cuts this year, and they could take even longer to come through. And despite all of that, markets were still higher on the day, so pretty interesting. Inflation numbers higher 2 months in a row, and markets still higher on the day. And then you can see those year-over-year numbers for core and headline. So the core number was down by 0.1%, and then the headline number up 0.1%. So they are trending back together, and it is a little bit reassuring to see the core number come down. But of course, both of them are important. And then the other piece that they mentioned in this article is that we did see a lot of jobs added to the economy last week, 275,000, which was about double the estimate. So the job market continuing to stay tight and inflation coming back, both of the things that you would not want to see if you're trying to get cuts this year. Moving over to fear and greed, we did see a slight step up to 69 from yesterday at 64. A week ago, we were at 73, so this is still a little bit lower, but this seems like another one of those really shallow dips right into this 65, 63 area, right in that same zone, and now we're getting a little bit of a bounce higher. We've been seeing this for several months now, shallow dips and then rallies back into that 75 range, and that does seem like what we're getting here again. Momentum, extreme greed, strength, still extreme greed, breadth ticked down just a little bit back into regular greed, put call ratio, extreme greed, volatility fell off a cliff here today after the CPI report, so that makes sense. And then the interesting thing here is that safe haven demand is still in fear. This has been trending down for a couple of days, and it is still in fear, so people who are buying bonds are buying them up quite quickly, and the spread here on these safer bonds has narrowed quite a bit. However, junk bonds still in extreme greed, so interesting to see that. We'll see if it means anything in the short term, but right now it does not seem to. Moving over into seasonality, you can see here for the 12th, we were expecting a slight dip, but we also did not really get the rally that we were expecting on the 11th, so potentially this is delayed a little bit. Got the rally into today, so in terms of seasonality, waiting to see if we get this second kind of double dip into mid-March, but right now it seems like we're in the sideways chop until the 15th. We'll see how that plays out into the options expiration. This is still a third week options expiration, so still some volatility potentially, but right now it seems like we're kind of neutral and potentially heading towards that rally into the end of the month. And then moving over to the calendar, you can see tomorrow is expected to be bullish, and then we have that triple witching on Friday. Don't forget we have PPI and retail sales on Thursday, so keep that in mind. Those will come out in the morning. So anything you hold into the close on Wednesday will be affected by those numbers on Thursday morning. And then moving over to the economic calendar, you can see that core year over year, 3.8. It was actually expected to be 3.7, so it was higher than expectation, but it was below the previous read. And then month over month, above by 0.1. And then the headline number was actually in line for month over month, but higher for the year over year. And then federal budget, very slightly less negative than expectations. So that's interesting. Doesn't have a huge impact. And then looking at tomorrow, pretty much nothing on the calendar, 30-year note auction. And then, like I said, PPI, as well as core retail sales, and then Fed balance sheet at the end of the day. Moving over to max pain, you can see options are up to 5.6 million. That is a ton of options. The put options are at what we typically see on the month, and that just goes to show how high this put call ratio is. To me, that's indicating why markets are still headed higher. Put call ratio super, super high on the SPY. Max pain still all the way down here at 490, which is definitely concerning. You can see 516 is the current price. We do have some call walls here at 520 as well as 522, so that's really where I'm expecting markets to top out. But even with that, that gives you about another 1% this week, which would be still a pretty substantial move. If we were to fall anywhere down to 500, even 510 makes sense, which would be anywhere from 1 to 3% down move before the Friday session, which would be obviously substantial. Moving over to the charts, starting off with the S&Ps here on the hourly chart, you can see big wicks up and down on that CPI report. Went all the way up to 514.83 and then dipped all the way down to 510.36. So pretty wide range on that candle. Hit the 144 EMA as well as VWAP, bounced from that level, touched it again here on the second candle, that 8 o'clock candle here on the hourly chart. And then after that, we held above 513.27, then rallied the rest of the day. Slight midday dip, but nothing convincing, and then ended up super positive on the day, over 1%. Momentum bullish, RSI bullish, continues to look good coming off of that 9 EMA here on the daily chart. Trend resistance up around 523.50 or so. I don't think we'll get that high, at least on a closing basis for the week, but in the short term, we could absolutely get that high. The all-time wick high for the SPY is 518.22, and that's definitely within striking range as well, only about $2 higher from current price. So everything still looks bullish, structure still intact, and short term also looks bullish. Moving over to the SPY here on the Tasty charts, on the hourly chart, you can see that same dip low, hit that second ATR band, rallied higher, hit the third ATR band to the upside, makes sense why we had a slight pullback there, rallied back up almost to that level. And you can see third ATR band now at 518.09. Would make sense to get into that zone tomorrow. Can absolutely overthrow it just like we did here, but ultimately it does tend to dip a little bit lower and then rally back up to that level again. So we'll see how that plays out. Short term, finding a little bit of resistance, but in terms of structure, still bullish, just like we saw on the trading view charts. Moving over to the NASDAQ, similar thesis here. You can see a couple of wicks low. We got above the 21 on the hourly after hours yesterday. Held above it pre-market, dipped low on that CPI data as well as VWAP there, tested those levels, and then similar thesis, rallied up early in the session, dipped midday, rallied into the end of the session. Everything looks strong, hit that 21 EMA, and then you can see trend resistance up around 449 or 450, right in that range. Momentum bullish, RSI looking to turn bullish. Volume on the day was pretty strong, so I would expect at least a little bit of continuation tomorrow based on these charts. Moving over to the Qs on the hourly chart here on the Tasty charts, you can see hit that first ATR band to the downside. Did not quite hit that third ATR band, which is a little bit concerning. Usually you want to see it hit that resistance, pull back, and then rally back to it. Showing a little bit of strength in markets. We did not do that, so that's a little concerning. You can see on both of these previous runs, we did hit that level and then pull back, hit that level and then pull back. Here we did kind of come up a little bit short. Obviously structure still bullish. You can see consolidation at least a little bit. Overall not bad on the day. We'll see how it plays out tomorrow. Third ATR band sitting up at 444.92. Moving over to the Russell and the Dow. The Russell was actually down a little bit, 0.14, so nothing convincing here. Very little changed on the day. Momentum bearish, RSI still neutral. It is still holding above 204.61. It did test that level as well as that lower trend line in that same area. This is starting to look a little bit weaker here as well, coming out of this rising wedge structure. If this breaks below the 21 EMA, it's probably going to be headed significantly lower, back below 200 at least. That's sitting at 202.60. So critical trend support 203.70 and then 21 at 202.60. And then the Dow on the day, very positive. 0.61, momentum ticking towards bullish, RSI definitely bullish, and you can see it rallied right back to that next trend line, found a little bit of resistance there. It is up after hours. Next trend resistance would be up around 394.50 or so. We'll see if we can get that high, and right now it does seem possible. All of the indicators do look quite bullish here on the Dow. Moving over to the equal weighted S&Ps, you can see we are still holding above that 164.87 level. That was our previous all-time high going back here to January of 22. You can see right now still holding above it. Positive on the day, 0.26%. Momentum's fading a little bit, so that's a little bit concerning. RSI ticked higher. It's definitely in overbought conditions. Up after hours. Let's look at this on the hourly chart. And you can see very similar thesis. Big wicks, still holding that 55 EMA here on the hourly chart. Looks strong though. It's up after hours. Looks like it's about to take out these previous highs from Friday of last week, and this looks strong. So equal weights headed higher, and it seems like the market breadth continues to strengthen. Moving over to the MAG7, you can see another very positive day here, just like everything else. Hit that 200, which we tested yesterday. Did dip below it after hours, but got back above it right at the end of the after hours session. Held above it pre-market and then rallied higher, holding that 21 EMA. So structure bullish. Trend resistance up around 336.60, which would give you about another $8 or so of potential upside. You can see we tested that level previously and then rejected. Looks strong here. RSI almost hit overbought conditions. If this breaks down from here, that's going to be quite bearish though. So interesting level. You can see previous high, RSI, very overbought, starting to rally back towards that level. And then we'll see if we get any divergence or if this breaks down as a lower high. And then looking at it on the daily chart, you can see we're still within this structure looking for that trend resistance. Held this longer term trend right there at 347.85. Momentum ticking back towards bullish, RSI headed back towards overbought conditions, and everything on the daily chart looks bullish as well. Moving over to Apple and Tesla, you can see Apple up 0.28%. Momentum continuing to tick towards bullish, RSI neutral here, back above the SMA, but still below the 50 line. We'll see if we can get a swing back up to this trend line. Let's go ahead and extend that out a little bit. Trend line right in that VWAP and 21 EMA area, that would be up around 177.75. See if that happens. Right now, still neutral, just below that 9 EMA after finding a little bit of strength. And then looking at Tesla, negative 0.13, nothing convincing, still holding super close to that level, 177.70. It's been chopping on top of it for a while. Momentum not doing much of anything. RSI slightly bearish. In terms of thesis, still watching this as a big down leg, bear flag, and then breakdown. Has not really broken down below these lows here yet, but if it does, there's a lot of downside potential. So definitely watching this one closely. And it's been hanging in there pretty well considering the structural weakness that we've been seeing on the charts, as well as the issues that Tesla, the company, has been having. Moving over to Apple here on the hourly chart, just to highlight, you can see it's been a very big downtrend. Found a little bit of a base. It's been trending between that midline and that first and second ATR bands. Had a pretty big overthrow here and then fell back right into the middle. Now you can see it's kind of flattening out a little bit. We'll see how it plays out here. But right now, like I said, short-term bullish. Want to see it get up and start to test those upper ATR bands to show a little bit of strength. But right now, it does seem to be fading on this short-term rally. Moving over to Meta and NVIDIA. We've been talking about these for a couple days now. Meta back up 3.34%. Big rally. Momentum still bearish. RSI still neutral, but strong on the day. Held that. Got back above 189.67. Rallied up. Hasn't quite filled the gap yet. That's going to be up around 506.50. We'll see if that move can happen tomorrow. And then that all-time high here at 520.30. We'll see if that can rally. Right now, looks okay. It's back above all the EMAs and SMAs, so that's strong. And then similarly here on NVIDIA, as you would expect, we ended up catching a bounce from that 9 EMA. Looks very strong. I'm still a little bit concerned about this Friday candle. Big move higher, big rejection, tons of selling volume on that move. But since then, we've bounced back above these shorter term trend lines. See if we can make it back up to that longer term one at 996. Momentum bullish, RSI still hovering in overbought conditions, but this SMA is so high that we're not above it, even in overbought conditions, which is pretty ridiculous. But overall, NVIDIA is still bullish. Moving over to Microsoft and Amazon. Microsoft up 2.66%, very strong rally coming off of that trend line back above all the EMAs and SMAs. Have not really made it out of the top of this consolidation. If we do, you have some trend resistance up around 420. That would be just below the all-time high here. Momentum ticking towards bullish, RSI bullish. Microsoft showing some strength here today. And then Amazon similarly back above the level, 174.23. Hit the trend, found a little bit of resistance, still positive, almost 2% on the day. Momentum ticking towards bullish, RSI still neutral here. So definitely in this consolidation, waiting for some clear direction. Moving over to Staples and discretionary. Staples was very positive on the day, got right to that trend line like we thought it would, 0.52%, momentum bullish, RSI bullish, and it is up after hours. Seems like this is going to push towards that 77.50 level. It's at 76 now, well above the level. Going to push to that next one, I'm pretty sure. And then looking at discretionary, actually positive on the day also. Pretty interesting. Got back above 180.10. As long as you hold that level, it's still bullish. Yesterday we were below it. This does look pretty positive, actually, considering the gap down, doji, gap up, rally. Still below the 9 EMA at 181.59, but momentum ticking towards bullish. RSI still neutral below the SMA, but it does seem like it could swing higher. Back up to that 185.36 level, but right now still in a consolidation for about 6 days, waiting to see if it can break that and push to this previous high. Moving over to industrials and utilities. Industrials caught a little bit of a bid, gapped right to that 9 EMA. It's still at a lower high, momentum still bearish, but did find a little bit of strength, 0.44%. We'll see if it pulls back to the 21 EMA down at 120, but right now looks okay, potentially back up to that trend line down at 122.93. And then utilities did pull back after testing that 64.20 level just a little bit, hit the 9 EMA. It is down a little bit after hours. Maybe we see a shallow pullback here, but I'm still bullish on utilities. It's had quite a run. hit a little bit of resistance, seeing a little bit of a pullback, and the structure is still intact, just looking like a shallow pullback in my opinion. I'd want to see 62.59 hold. If that does, that would be a much higher high, much higher low, and then we'll see it rally back up to the trend line, potentially around that 65.16 area if it follows through with that rally. Moving over to breadth here on the 20 and the 50-day. 20-day breadth continues to rally, grinding higher every day. It seems like almost to that 65.80, 86.50 level. We'll see if it can get there. Seems like it's headed at that point. It's just a few points off of it, and it's going in that direction. Momentum bullish, RSI bullish. 50-day average did pull back a little bit, back below 77.46. Momentum stepped down a little bit, RSI stepping down a little bit. Obviously, the structure is still intact. It's above all the EMAs and SMAs. If this establishes a lower high here, that could be quite bearish. But right now, it just looks like a shallow pullback, just like we saw here on 5 March. Then we got a continuation higher, shallow pullback, continuation higher. We'll see how that plays out, but still looks bullish in my opinion. Moving over to yields, you can see they did perk up again here today. So that's 2 days in a row. Hit the 21 EMA, see if it rejects from there. That is one of my favorite setups. So we dipped below, retesting that level, found a little bit of rejection. If it sells off more, you should expect a lower low, potentially all the way down in that 4.25 area. If that happens, then we should expect equities to go much higher. I'm not sure that that's going to happen based on the CPI data. It makes sense that yields are higher based on that data. And you can see momentum and RSI on both of these looking pretty bullish. Momentum definitely bullish, RSI finding some resistance at the SMA. If it's going to do it, this is the area where it would reject. So continuing to watch this one closely. Like I said, if yields go higher, that should be bearish for equities, but if it rejects from here, that should be more bullish. Moving over to the dollar here on the hourly and the daily. Dollar went much higher on the CPI, found a little bit of rejection back down to the 21, slightly bullish on the day, momentum ticking towards bullish, RSI going a little bit higher. We'll see how this plays out. It's not really doing much of anything in terms of structural changes. Short term, slightly bullish. Medium term, still doing nothing here, and still below my level at 102.98. Just watching this one for some clear direction. Overall, still looks bearish. Moving over to bonds, J&K doing nothing as it's been doing for several months, right in the same area. TLT gapped down and fell right to that 200 SMA. We'll see if it can hold that level at 94.77. If yields continue higher, obviously this is going to continue lower. Might retest the trend here at 94.20 or so. Got the 21 EMA sitting down at 93.96. Just could not get above that 96.50 level, and then going lower with that CPI report. So we'll see how this plays out. Might be another one of these kind of big moves higher, quick rejection to a lower low. And if that happens, this could be going much lower down to 89.16. So watching this one closely as well as the inverse of yields. Moving over to volatility, move index sold off a lot, VIX sold off a lot. Makes sense as markets were going much higher on the day. See if that 55 EMA holds here at 13.65. At this point, I wouldn't expect it to. We got some trend resistance a little bit lower. Let's extend that out. Trend resistance down around 13.05, right in that range. RSI breaking down, seems like it's headed lower. That would put you right in that 12.75 level. And then below that, I do have a little bit of support down at 12.42. We'll see how it plays out, but right now this looks quite weak. Potential double top, midpoint. If it breaks down further, that should be bullish for equities. Moving over to my accounts, you can see I was up about $830 or so on the day, so pretty good. You can see same positions. I did sell an IWM call here today, made a little bit of money on that, as the IWM was down a little bit on the day. Still have some credit there. That expires tomorrow at 2:05. Let's look at that after hours. And you can see it was down just about 12 cents or so after hours. And then looking at the Qs, similar thesis, down just about 10 cents after hours, nothing super convincing. I did put the share position back on as it looked super bullish, made some money on that position, and then sold a call here for tomorrow at 4.44. I sold a call for today and it ran through that and then rolled it out here to tomorrow for $1.37. Small profit on that covered call position, trying to collect about another $280 or so on that. And then $194 here at 4.43. We'll see how that one plays out. I was a little bit more conservative on this poor man's covered call. Obviously that made money on the day, which was good. And then rolled this out here, try to make a little bit of money tomorrow. Wanted to be a little bit more conservative, like I said, on that poor man's covered call. Overall, still bullish for tomorrow, as everything looked bullish going into the end of today's session. Let me know down in the comment section what you thought of the inflation data and how is that going to affect the Fed's decision going forward. Will we still see cuts in June, or will they get pushed out into the last quarter of the year? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.